Well, good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Thursday, the 24th of April, 2025, and the time about 6:50 p.m. Central Time. So, interesting day. What we have basically going on is the marketplace, the fear of missing out. I think that's what hit the market. FOMO, fear of missing out. You had the gold up, and you had the stock market up. Something's not making sense there. I don't expect the two to really be going in the same direction given the current fundamentals. We had no setup that tells us anything has changed on tariffs. We have China saying they're not talking to the U.S. We have the president saying they are talking again to the U.S. We've got still the problems in Ukraine and Russia where the two sides haven't done anything. The war intensified last night. The president was on a news conference today saying how much he dislikes what's going on and he wants Russia to stop doing what they are while they're negotiating. I don't know that he has any power on that. You had a bounce today and you're down a little bit in the bonds and notes, but they're still, in my opinion, have some problems through there. The energy markets were sitting very stable, nothing going on. Now, tomorrow, we have the University of Michigan final consumer sentiment indices coming out at 9 in the morning, and that's about what they're looking for so you can see it. So, we don't have a day heavy in news. We certainly will have earnings reports throughout the day, but you're in the season for that. So why don't we go to the charts and just see what the heck is going on? Because you had the dollar down sharply. It helped the metal markets. But is this just a market that's lingering where maybe it wants to set back even a little more? For the week, when you look at the chart, you're up 1.4%. If you take a look at how the chart has gone just on a regular bar chart, you can see the market's gone up, made that high just over the 3,500 level, backed off, and now it's in a consolidation phase. While it's consolidating, it's doing a good job so far of keeping the higher lows and the higher highs in place, which is what makes up a bull market. In terms of moving averages, they're still well under the market. If the market does as I'm expecting it will, where price is going to try to drop back to the 18-day average of closes, the question is, will you have enough days go by to get that average to climb before you take out that low of 3270, or are you going to take out that 3270 to get down to that near 3220 zone? I still don't think you'll get over 350990 before you hit that 18-day average. I could be very wrong. We'll see. The Bollinger Bands, you see where the resistance is in the market, and they're fully back in play at this point in time, and momentum has stayed down. So in order to develop and change the market from being overbought, you'd have to embed again. I'm not betting on that. I think the market wants to back off before that occurs. When we take a look at the gold-silver ratio, you can see the market's just fighting its battle right where we talked. Markets that stay over the 18-day average of closes have a tendency to pull back on them and fight battles at that point. And that's what it's doing. It did that back here, and now it's just gone to a higher level to do it. When we look at the silver market, the first thing I see is a market that is very overbought. The second thing, the market did clear the 200, the 100, and the 18-day average of closes, all three right here, and it has found a way to find support over them temporarily. What you don't want to see is the lows of today because it was an outside day up taken out. If so, it doesn't mean the market has to drop a lot, but it absolutely hurts the case if you're trying to make one that the silver market could go higher to catch up with where gold prices went in the past, to get that ratio narrowing in. The copper continues to be fairly well bid. It is very overbought. I personally don't think it has the power to go back to the 525 level here, but I'm not in the bear camp, so don't say, oh, you said that it wouldn't do that, and it did. It's not what I'm saying. I think it's used a lot of its energy right here, and that's why it's so overbought. I am expecting that it's going to retreat to the 18-day average and have to fight a battle against that price. The platinum market is fighting right at the moving averages as we thought that it would here, at least is what I've been telling you all week long, that the market was stuck between the 100-day and the 18, and it would trade in between that, and it's absolutely done that. Where the market could get itself into trouble is taking out the lows of Tuesday. If those lows were taken out, it'd be problematic in the market. I'm not seeing that right now. Last but not least, in the dollar index, you lost the bearish embedded reading. And as you know, when that happens, before you make a new low, I think the market has a tendency to run, and often does, to the closest main moving average. So I'm looking for the dollar to come up a bit here, even though it was down today 47 points. It still kept that reading lost before it goes down and breaks through this most current low in the market. I think it was around the 97.08 level, and we'll see if that is in fact what takes place. Other than that, I think you want to be careful. You want to pay attention to what the markets are doing, how they're going to try to go about whatever they're playing with right now. And one of the ways to do that is just go to our website, take a look at the free offers between the charts, the special reports, the price counts that we put out and everything. Just go to iraepstein.com, free offers, choose what you want, and I'll catch up with you all tomorrow.